In the news recently, we've heard how difficult it is to get your first home. And one of the reasons is, of course, the rising rate of inflation, lack of supply, building costs. We can go into all the political reasons why it's so hard. And now with younger people wanting to get into homes, their first question is to ask mum and dad. And that in itself isn't necessarily a problem, and I'm sure many parents out there are expecting that question to be asked of them and how they can work forward. But let's face it, sometimes parents separate, and that's an issue if you happen to be owning a property that is owned jointly by parents. So let's say, for example, you're in your early 20s and you ask your parents for help to buy a house. They come along and say, yes, certainly, not a problem, we'll help you into it. And they become on the title along with yourself. Then mum and dad, for any host of reasons, decide to separate. There's an interesting thing called the bright line test, that scary one that comes along and actually hits people and says that, well, actually, if you transfer the names out of the titles, that's a deemed sale. So let's say, for example, you have a house. You paid $800,000 for it, and 2 years later, that house is now worth $1 million. $200,000 increase in the value. Your parents separate, and you're like, oh, of that 200,000, I'm a third person, so it's about 65K. I'm going to be taxed on that. That's painful. Now, in tax law, there are effectively 3 exemptions: death, divorce, and extenuating circumstances. Bright line in tax legislation means an absolute understanding. So death and divorce are the 2 things that should not prevent you from going, well, one doesn't want to die, of course, but going through for the view of benefiting from or being affected by tax. So if mum and dad, through their settlement process, agree that one or the other is going to take the title from that property as part of their separation, then the continuity of the property continues. In other words, at the beginning, it's mum, dad, and yourself. Now, mum and dad come to an agreement, dad decides to take it over, the owner of the property now is dad and you. As the transmission of mum's share to dad is because of a relationship property matter, there is no change in the ownership structure at this point in time. So on that basis, that 200,000 increase in value is not subject to the bright line test. If dad then says to you, you can take it over and own it entirely to yourself, then the bright line test kicks in. So parents' divorces should not put any stress on you if you're tied up with them in a property, as it won't impact you from tax. It may impact you from a whole other reason, but from a tax perspective, you're safe.